Hi, I'm Vidhi Chheda, a mentor. Today's lecture is on ACCA skill level paper number 7, which is financial reporting. The topic which we are going to cover today, as you can see on your screen, is on revenue. We are going to learn a very simple concept wherein we are going to learn IFRS 15. Now, in this standard, it talks about recognition of revenue. When do you record revenue in your books of accounts? The timing of recording the revenue. Let's start with the basics. There are 5 steps which are given in IFRS 15. Let's see one by one. These 5-step approach will help you to understand when do you record your revenue. So firstly, the entity, the seller entity will apply these 5 steps, and based on that the entity is going to record revenue. The first step is the seller entity, the entity which has done sales. That entity will have to identify whether there is a contract. So there should be a contract between the two parties, seller and the buyer. So the first step to identify, that is to recognize revenue, is to identify the contract. Second, once you identify the contract, you need to identify the obligation. The seller entity will have to either give goods or services to the buyer. So what is the performance obligation that needs to be identified? On what is the basis of the contract? Then comes step number 3, where we identify what is the transaction price. Whenever there is a transaction between a seller and a buyer, there has to be an amount which they are going to deal with. The seller is going to provide the goods and services. In return, he shall be given a consideration. The consideration here that the seller will receive is called transaction price. Third, whatever is the transaction price, we need to allocate. Sometimes there may be bundle of goods and services. So the seller will have to allocate that transaction price for those goods and services which were there in the transaction. We will understand one by one. And the last step is when to record revenue. What is the point of sale? What is the timing when we pass the entries in our books of accounts? So the last step is when do you recognize revenue? Recognize revenue when the performance obligation is satisfied. Let's understand the 5 steps with the help of an example. Before we get into the example, I'll just quickly give you summary of what we just did. As an entity who has done sales of goods or services, you will have to record revenue in your books of accounts. Before recognition of revenue, you will have to apply these 5 steps. Again, the first step is to identify the contract. Second step, to identify what is the performance obligation. Third step, to find out the transaction price. Fourth, allocate the transaction price to the bundle of goods and services, if any. And the last one, when to record revenue. The revenue will be recorded only when the performance obligation is satisfied. Now let's come to an example. This example will really help us to understand these 5 steps. On December 1, 2001, Wade receives an order from customer for computer as well as 12 months of technical support. So here what do you see? Here you see that there is a contract between seller and the buyer. Wade is the seller, so we are going to do the accounting entry from the point of view of Wade. Wade has entered into a contract with the customer wherein Wade is going to provide 2 things. One, computer, and second, technical support, that too for 12 months. Wade delivers computer and transfers its legal title. Very important point. This point Wade delivers the computer and transfers its legal title. It means that Wade has immediately transferred the entitlement of the goods to the buyer. The computer has been sold along with the title of the goods. The customer paid 420 on 1st of December 2001. The computer normally sells for 300 and technical support for 120. Let us divide this question into the 5 steps we have learnt. Okay, so firstly there is a sale, Wade is the seller and the accounting IFRS15 will be applied by Wade. So step number 1, it was to identify the contract. So what does that mean? Here there is a arrangement between the seller, who's Wade, and the customer, that is the buyer. When I say arrangement, I mean it can be in writing, it can be written, it can be oral, or it can be based on business practices. But there should be some arrangement, there should be some understanding between the buyer and the seller, and whatever are the terms which are decided between the buyer and seller, it should be enforceable by law. So once the contract is entered into, it makes both the parties binding to the contract. So firstly, yes, there is an arrangement between Wade, who's the seller, and the customer. Okay, so step number 1, we have identified there is an agreement between the two parties. Step number 2, in step number 2, we need to identify what is the performance obligation. ऐसा क्या करना है सेलर को जिसकी वजह से बायर उसे पैसा देगा. So here there are 2 promises which the seller will have to fulfill. The first promise is to provide the goods, that is the computer which is provided on the same date. The legal title is also transferred for the computer. And second, technical support which has to be provided for 12 months, right? There are 2 promises which the seller will have to fulfill. First, the goods, and second, the technical support. So in this arrangement, there are 2 performance obligation. सेलर जब ये दोनों चीज़ें बायर को प्रोवाइड करेगा तब जाके उसका परफॉर्मेंस ऑब्लिगेशन सेटिस्फाई होगा. ऑलराइट. थर्ड स्टेप, डिटरमाइन ट्रांजैक्शन प्राइस. What is the actual monetary transaction between the seller and buyer? What is the value of the transaction? That is important. The computer and the technical support in totality will be provided for 420. Okay, so the transaction price between the buyer and the seller. Once the seller provides computer and the technical support, the buyer will have to pay the transaction price of 420. Step number 4. Now we have to allocate the transaction price. So what is happening here? When the customer will pay $420, then based on their actual market price, which is also called stand-alone selling price. Stand-alone selling price means एक्टिव मार्केट में जो मार्केट प्राइस पे ये इंडिविजुअल गुड्स या सर्विसेज मार्केट में मिलते हैं उसके बेसिस पे 420 will be allocated. In the question it is clearly given that the computer is available for $300 and the technical support for all the 12 months is available for $120. So this is how we will allocate 420. The revenue, the collection of 420 will be divided in 2 parts, one for the goods and one for the services. Now when do we record the revenue? For that we have to come to step number 5. There are 2 performance obligation. As and when performance obligation will be satisfied, we will record the revenue. The first performance obligation is selling computer to the buyer. This is happening on the same date. So when do we record revenue coming from computer? The day when the control will pass to the buyer. So it's clearly given in the question. The computer has been provided to the buyer on 1st of December and on the same date legal title has also been transferred. So which means the seller will record $300 immediately on the 1st of December. This is revenue from sale of computer. Okay, and this will be recognized on the same date, which is 1st of December 2001. All right. The second performance obligation is of the technical support. Now this technical support will be provided over a period of 12 months, starting from December, then January, Feb, March, April till November. So this service will be provided over a period of 12 months. So how do we and when do we record the revenue? As soon as the service for any particular month is over, we will provide revenue recognition for that month. December, at the end of December month, we will recognize revenue. How much? $120 for all the 12 months. So $10 for each month. So here $10 will be recorded as revenue. जितना सर्विस प्रोवाइड किया है उतना ही रेवेन्यू रिकॉर्ड करोगे. I hope with this example, the first stage of revenue recognition 5-step approach is clear. The first step is to identify the contract. The second step is to identify the performance obligation. The third step is to identify the transaction price. The fourth step is allocation of transaction price. And the fifth step is to recognize the timing of recognition. I hope this video helps you. I will see you in the next lecture.